Welcome Forex traders. We are looking at the Aussie Yen 15-minute time frame chart here in front of us, of which I have just opened a sell order into this market based on the engulfing pattern that appeared at this bounce point, at also the outer Bollinger Band. So what I've done here really is I've drawn my resistance line across right here. The price has broken through this level of resistance. However, it's been contained within this last bounce point. So I have two lines drawn here that I'm looking at, and the reason for that is you see the price break right through here, and then it closes back about even with the breakout line, which tells me, well, it's really nothing. It's really not a nice breakout because it closed back down. It's not a engulfing at this level. It's not rejecting this level. We have a couple small bodied candles, a little move up. This is nothing. I wouldn't consider this a place for an opportunity for a long on this engulfing. I wouldn't consider that at all, just because the stall that happened here. I like to see the price break out and either get a nice big check signal or stall and then get the check signal or move clear away, come back and retest. So when you don't see those two things, I consider this move right here a bounce point, and it's still contained under this level of resistance. So that's basically what we're rejecting here. We're rejecting this level of resistance right here. So when I saw this engulfing signal, it's a nice big candle that takes out the prior, well, everything prior. So I got in on a pullback. I believe my entry was just 2 candles ago, probably 20 minutes ago, right on this candle right here. This little doji candle was the entry. So I waited for the price to pull back. It started to move back to the downside, and that's where I took my entry with the 2 times profit target at the most recent logical swing low, which would be here, or even this bullish candle. So somewhere in this range is where I expect to see the price go. So we'll watch this over the next hour or two and see how it goes. Okay, just over 1 hour has elapsed, and our 2 times take profit target has been reached. It was reached on the prior candle right here, just right before the market closed. And what I want to talk to you about real fast is interfering with your trades at the last second, right before the candle closes, right when the price nears your target, your take profit target. What happens is, if you happen to be sitting there watching that trade as it unfolds, you will see that more often than not the candle will appear one way, and just prior to the close it will manifest into something entirely different. And what I mean by that is, as I was watching this close, I was looking at it during the formation of this last candle. And 2 minutes before the close of this candle, what I had here was a giant wick that just missed my profit target and a white body right here. So I was looking at what appeared to be a giant bullish spike candle that was getting ready to take off to the upside without me and without taking my profit. So a lot of times emotion enters your head, enters your thought process. You get emotionally involved in the trade, and you decide that I should exit this trade right here when this candle looks to be closing to the bullish side. Whereas the reality is, within the next 2 minutes the price fell and it took the profit, and then it closed right there, and now we continue to the downside. So the trader that decides to exit right here and interfere with the trade is also the same trader that will not be successful at this business over the long run. And the reason for that is, we have a precise trading plan in place. That is one that has specific patterns and signals that we enter the market based on. And we do this at key levels. And statistically, the statistical probability of these patterns taking a 2 times profit is very good. So what you have to consider is, are you prepared to alter the plan And let me describe what I mean by that. Okay, let's just assume for a minute you exited right here at just around 1 times profit, or perhaps the candle did close bullish. The price moves up into here. Oh, you panic. You take your exit at just a little bit of profit. Now, 10 minutes later, the market drops off and comes right down and takes out your profit target, but you're left with virtually no profit. If that's the way you trade every time you get involved emotionally, you're going to see that you're going to be taking less than 2 times profit on your wins, and you're going to be taking a 1 times loss on your losses. So as soon as your losses, even if you win and you take your profit at 1 times on a lot of them, and your losses are 1 times, your chance of being successful with a 1 times 1-to-1 risk reward ratio on trades is very slim to none. You have to have a 2 times risk reward trading plan at minimum to be successful long term. So if you haven't already tried it, try to trade for 1-to-1 and see how far that gets you. So what I'm getting at is, with a proper trading plan that has high probability trading patterns and signals, you don't need to interfere with the trade. Let the trade play itself out. If the price happen to move back into this direction, wait and see if it takes your profit. Maybe this one won't. Maybe this one will go against you, and you'll be down 1, and you go, oh, I should have taken it here. Well, no, you shouldn't have, because now you're going to set your mind up to interfere with the trades, and you'll see that the next time you start getting these bounces that do go profitable, you start taking less than 1 times, and you start losing a few, and now you're actually losing more than you're winning, and the business just fell on its face. So do not interfere with the trade. Set it up per the trading plan, and stick with that, and you will see that your success will come to follow that mindset. Okay, and there you have, that's a 15-minute trade on the Aussie yen based on bearish engulfing signal at a bounce point.